Hello everyone and welcome to this first video of this channel. My name is Ace and I'm full-time day trader. I'm practicing ICT Concepts and I'm usually taking trades during the London and New York session on NQ, the Nasdaq. In this channel, I'm going to show you how am I analyzing the graph, preparing for the session and actually executing my trades. This would be in hindsight just for training purposes. You know, if you train your eyes to see something, when it actually happens, you will see it. And if you like any of my content and you find it insightful, please leave a comment, like my videos, and subscribe. It will help me generate more content for you guys. So without further ado, let's jump right into the graph. Today, we're going to analyze March 28, 2024 during the London session. Usually, I start my day analyzing the weekly chart. And when you look at the weekly chart, we see that last week we swept the high and we traced back lower. And during the beginning of this week, we're on Thursday, we just touched the previous week high and we're heading a little bit lower. Jumped into the daily time frame, we see that we have a CD, a BC, sorry. We have a fair value gap, and yesterday we tapped the 50% of this fair value gap, and we started to trade higher. And when we approach the graph before the London session, we see that we retraced a little bit lower. And actually, what I want to see is that, I want to see us tapping the 50% of that week. And this might be a point of interest for me on a daily basis candle. And this would be my first thing that I'm looking at, right? Jumping into the 4-hour chart, I see that, we swept the liquidity, 50% of this daily fair value gap, and we traded higher. On the 4-hour chart, I see that we have a fair value gap right in here, and I'm going to mark it, right? And this is the 4-hour fair value gap. It's a BC one. So this would be a point of interest for me during the session. I want to see us maybe taking liquidity from the upper portion of this 4-hour candle and maybe trading down into this fair value gap just to rebalance it. And this would be two areas. One would be the 4-hour candle high. Sorry, let me take let's mark the 4 hours high as a liquidity, a buy side liquidity, and then we have a fair value gap as the lower side as a sell side liquidity, right? Or a rebalance of this area. This would be our point of interest. Going to the 15 minutes, we can clearly see that we have buy side liquidity, right? And this buy side liquidity is basically an external liquidity for this movement, right? And this is before we actually going into the graph. Let's play forward and go to the actual session. So usually the London open kill zone starts at 2 to 5 a.m. London Eastern time. But because of daylight saving time, in this day of the year, it's 3 to 6, right? And I'm looking for a trade during this London open kill zone time window, 3 to 6, but usually it's time 2 to 4, right? We fix it a little bit. Okay, let's remove it from the hourly chart. Good, good, good. And now let's see what happens when we start the London open kill zone. So right now we're in the middle of the range, right? And I want to see us either tapping into the buy side liquidity or rebalancing the fair value gap before I'm approaching the graph and taking any trades. I don't want to take a trade in the middle of the range right now, right? So yeah, let's see. Okay, Okay. Yeah, now we can actually start. So let's moving back to the 5 minute candle, and I'm trying to with the replay mode, putting forward like the candles, and I see that currently I'm in discount, and I don't want to take a trade from discount, like, but really, if you're it depends on your style, you can took a long here, trying to hit buy side liquidity because we're in the discount and we're just flipping into the premium area. But again, it's not the way I'm trading. I'm either taking a trade from the external liquidity to internal, or from internal to external. So up high, right there, we have an external liquidity. This is the top, the highest point of the 4-hour candle. And down there, we have the internal liquidity, the fair value gap between each rebalance. So my trade idea is going towards, hey, either we take external and then we go to internal, or vice versa. And again, with risk management, I think we'll be fine. And I'm waiting. And this is usually what you need to do. You need to wait for your setup to form. We see, on certain in the beginning of the London session, we go up to take the external liquidity, trade higher. You see that we tapped the high just to trick traders that trade double tops, and we then swept the high and get back into the zone. Now, what I'm usually doing is going into the 3 minute chart just to have a better entries for my trades. And if you look at basically the 1 minute chart, and this is why I suggest you avoid the 1 minute chart, you see that we have a fake displacement to the downside with a fair value gap to trick traders to think that we're reversing down. But again, we didn't sweep any liquidity, and we didn't perform any market structure shift. So I highly, highly advise you to keep away from the 1 minute chart unless you know what you're doing and you back tested your strategy for a while and you know what to do. So getting back to the 3 minute chart, we see a nice sweep of liquidity from the external liquidity and a big displacement candle to the downside. Let's see if we have a fair value gap forming. Yeah, so if we displace down, I'm expecting the next round liquidity to be this internal liquidity from the forward tapping the fair value gap. So we see that we have a fair value gap. Let's draw it out. This is the CB, right? And based on your entry technique, you can say, hey, I have a fair value gap. This is my entry. You can took a trade from the lower level of this fair value gap, or you can take a trade from the 50% of the lower level. Usually what I do is I'm taking a trade from the lower level of this fair value gap, and your stop can be, up high, and it can be on the high of the candle body, depending on your style. But I have a fair value gap. I'm not expecting price to rebalance it and go into the rejection block. So my entry would be on the fair value gap, and my stop would be above the candle open up there, right? And your targets can be, first TP would be this beginning of 4-hour fair value gap. The second TP should be on the 50% of this fair value gap, and the third one would be when we complete and rebalance this fair value gap. And it would be a little bit more dangerous. But again, if you manage the risk, it should be fine. So this is basically the trade. We see that we are trading a little bit higher into this fair value gap. It tapped me, and this is actually a trade that I took. Consolidating a little bit, displacing downwards, and again, taking our first target and second target. And this was a beautiful I think 2 to 5 trade. And if you kept your runner to the third TP, you almost got hit, but you didn't. And then when we're tapping the 50% of the fair value gap, what I would like to do is basically this was my goal for the day. But again, if you want to be with the bias, you could took the trade from the internal liquidity back to the external liquidity. And then you would expect on the 50% or complete rebalance of this for our fair value gap to give you a sign of reversal. Here we have a big displacement candle. We have a little bit of a volume imbalance and a fair value gap down there. But again, depending on your style, you could enter right here on this volume imbalance or little bit of a fair value gap, taking a long entry. This would be a little bit more risky in this case because the fair value gap wasn't that meaningful. But again, this is a trade. If it matches your backtesting in your model, that's fine. Your first TP would be on the first swing high. Second would be on the second major swing high, but inside the TB, and the third one would be during the high of the London session. And as you can see, the trade laid out very, very well. Take our first TP and with a little bit of retracement, take the second TP. And actually, this is a nice trade. This is like 1 to 3, 1 to 4. And if you would play it out and let the time pass, and if this is the kind of trader you are, you could took the third TP here, but again, it's depending on your risk management style. And this is the trade that you could potentially took. Again, patience. And you could took a trade with the bias or against the bias from internal to external liquidity, and this is usually what I'm usually doing. Hope you like the video. If you like the video, like and subscribe. And if you have any question, hit the comment button and let me know what you're thinking. Thank you guys so much and see you on next time.